Very good morning, one and all. I hope each one of you and your family are safe from COVID. Today, our topic is the benefits given by Singapore government. We are going to be looking at this presentation in two parts. Today, we'll be covering a section of it. These are the stimulus packages which is provided by the government of Singapore for the benefit of the Singaporean citizens, the residents, and various companies operating out of Singapore. So, research credit to Grace and Lita for this wonderful presentation. Certain legends used in this presentation: Apex Application Programming Interface Exchange, CAS, Civil Aviation Authority of Singapore, CIT, Corporate Income Tax, CPF is Central Provident Fund, ESG, Enterprise Singapore, EFS, Enterprise Financing Scheme, FI is Financial Institution, FTS, Financial Trading Training Scheme, GIRO, General Interbank Recurring Order, HDB, Housing and Development Board, IBF, Institute of Banking and Finance, MAS, Monetary Authority of Singapore, Private Hawkeye PHC, Personal Income Tax PIT, Singapore dollars, Standard Trading Scheme STS, and Year of Assessment YA. So you'll be seeing most of these legends being used, and when it comes in, then I'm going to reiterate that legends once again for the better understanding. So our schema for the day is we look at the overview and the stabilization and support package as a first phase, and then in the next part we look at the care and support package, MAS package, and the temporary COVID-19 Measure Act. To start with the overview, the COVID-19 crisis has reaffirmed the value of Singapore's key institutions and the key tenets of the country's prudent fiscal and monetary policies. The government has handled its reserves very well and come up with excellent stimulus packages for financially stressed companies and individuals in this time of the need. In addition, the COVID-19 Temporary Measures Act 2020, which was passed in the Parliament on April 7th, 2020, to provide relief temporarily from the inability to perform contractual obligations, which we'll discuss much more in detail in upcoming slides. So today's discussion will be on the various relief measures and benefits given by Singapore to individuals and corporates in the wake of the existing pandemic. So the overview of the fiscal policy: the authorities have announced 4 different measures or packages on various dates: February 18th, March 26th, and then April 6th, and the last one on April 21. The cumulative amount of the total stimulus works out to 63.7 billion Singapore dollars, which works to 13% of their GDP. The care and support package provides support to households worth $5.7 billion, including a cash payout to all Singaporeans and additional payments for lower income individuals and the unemployed due to this pandemic. The stabilization and the support package provides support to business, about $35.3 billion, including wage subsidies, an enhancement of financing scheme, and additional support for industries directly affected and the self-employed. The government has also set aside a loan capital of $20 billion and introduced other economic resilience measures of 1.9 billion Singapore dollars. Looking at the overview of the monetary and the macro financial policies which is framed by Singapore government, the MAS, which is the Monetary Authority of Singapore, and the financial industry has announced 2 detailed packages of measures to help individuals and SMEs facing temporary cash flow difficulties. The package has 3 different components. One is to help individuals meet their loan and insurance commitments, support small and medium enterprises with continued access to bank credit and insurance cover, and third, to ensure interbank funding markets remain liquid and well functioning. On April 8, 2020, the Monetary Authority of Singapore announced a 125 million Singapore dollar support package to sustain and strengthen the financial services and fintech capabilities. The package, funded by the Financial Sector Development Fund, has 3 main pillars, namely supporting workforce training and manpower cost, strengthening the digitalization and operational resilience, and enhancing the fintech firms' access to digital tools. So the overview and the approach is going to be more on the fintech capabilities improvement, because we know things are going to be at least going online for the next few years, and if not, that will be the way of life going forward. So coming to the first package, which is a stabilization and support package, it has the first scheme which is called as a job support scheme. Under the job support scheme, it will help enterprises retain their local employees who are Singapore citizens and permanent residents during this period of economic uncertainty. So the government will co-fund the first 4,600 Singapore dollars of gross monthly wages, which includes the wages plus the employee CPF contribution, but excludes the employee's CPF contribution to each local employees for 9 months. The wage support for the months of April and May will be topped up to 75% for all sectors to support firms during the circuit breaker period, and for other months it will remain unchanged as per the table below. So for the 2 months, April and May, which is a major circuit breaker, after which we're going to see from 1st of June, there's going to be a lot of relaxation. All sectors, irrespective of the sector, all employees will get 75% of their gross monthly wages for these 2 months, April, May. Post that, for tier 1, which is aviation and tourism sector, which is the hardly hit sector, which includes airlines, airport ground handlers, airport operators, qualifying licensed hotels, qualifying licensed travel agents, qualifying gated tourist attractions, cruise lines, cruise terminal operators, purpose-built meetings, incentives, conferences and exhibition venue operators. For them, the JSS support will provide 75% of the first 4,600 of gross monthly wages per local employee. For Tier 2, which is food services, which includes licensed food shops and food stalls, including the hawker stalls, 50% of the first 4,600 of the gross monthly wages per local employee will be paid for 9 months. So which works out to $2,300, which each staff will be getting paid from the government through the company. Sector 3, all other sectors, all other employees, irrespective of the nature of their sector in which they work, 25% of the first 4,600 of gross monthly wages per local employee will be paid. The wage support for shareholder directors will only apply for companies registered on or before April 20th, 2020, the day of launch of this particular scheme, and only for the wages of shareholders directors with assessable income of 100,000 Singapore dollars or less for the year of assessment 2019. So for those companies in which the shareholder directors are also claiming salaries from the company, if they are as income declared with an assessment income of $100,000 or less in the assessment year 2019, they will also be eligible for $1,000 a month. So self-employed person SEP income relief, which is called as a SIRS, self-employed income relief scheme, to help the self-employed Singaporeans with less mean tide over this period of economic uncertainty. Eligible self-employed person will receive $1,000 a month for 9 months under SIRS. An enhancement to wage credit scheme. The wage credit scheme support businesses embarking on transformation efforts and encourages employers to share productivity gains with workers by co-funding wage increase. So this co-funding for qualifying years 19 and 20 at 20% for qualifying wages in 19 and 15% of qualifying wages in 2020, where the gross monthly wage ceiling is $5,000. So for qualifying for the wage increase, the increase in the gross monthly wage of at least $50 given to a Singaporean employee in the qualifying year up to a gross monthly wage level of 5,000 will be co-funded by the government in equal parts between the company and the government. In addition, increases in the gross monthly wage of at least $50 given in 2017, 18 and 19 up to a gross monthly wage level of 5,000 and sustained in subsequent years of scheme will also be co-funded. Coming to the corporate income tax rebate and enhancement of tax treatment under the corporate income tax system, the CIT rebate, which is a corporate income tax rebate, to help companies with cash flows, a CIT rebate of 25% of tax payable capped at $15,000 per company will be granted for the assessment year 2020. So all companies which is due to pay taxes for the year of 2020 assessment year will have this rebate of 25% of the tax capped at $15,000. Enhancement of tax treatment under the CIT scheme for 1 year. Companies paying their CIT by Gyro can automatically enjoy an additional 2 months of interest-free installments when they file their estimated chargeable income within 3 months from their financial year end. This automatic extension of investment plan by 2 more months will apply to those companies who file their ECI from 19th February to 31st December 2020. Companies that file the ECI before 19th February 2020 and have ongoing installment payments to be made in March 20, and all companies with CIT payments due in the month of April, May, June 2020 will be granted an automatic 3 months deferment of these payments, and the same will be collected in July, August, and September 2020 respectively. For self-employed person with personal income tax payments due in the month of May, June, and July will be granted an automatic 3 months deferment of these payments, and the same will be collected in August, September, and October 2020 respectively. They also allow up to $100,000 of the unabsorbed capital allowance and trade losses for the year of assessment 2020 to be carried back up to the 3 immediately preceding year of assessment instead of 1 immediately preceding year of assessment which is existing before. It also helps to provide an option to accelerate the write-off of the cost of acquiring plant and machineries in the financial year ending 2020 over 2 years, and it can be written off instead of the 5 years. And it helps to provide an option to accelerate the deduction of expenses incurred on renovation and refurbishment in the financial year ending 2020. That is, any renovation and refurbishment done in the basis period for year 2021 assessment year, in 1 year it could be written off. So these help to reduce the tax liability on the SSC during this pandemic period. The next scheme we speak about Enterprise Financing Scheme, EFS. So SME Working Capital Loan, which is coming under the EFS WCL, Enterprise Financing Scheme Working Capital Loan, which is available to SMEs across all industries, will be enhanced from March 2020 to 31st March 2021 to help SMEs with their working capital needs. The government will raise the maximum loan quantum to $1 million and enhance the government's risk share to 90% for loans initiated from 8th April 2020 to 31st March 2021 under this scheme. Under the Trade Loan Enterprise Financing Scheme, it supports the Singapore-based enterprises' trade financing needs, which includes the financing of short-term import, export, and guarantee needs. The EFS term loan or trade loan, which is available to enterprise across all industries, will be enhanced for 1 year from 1st April 2020 to 31st March 2021 to further help enterprises with their trade financing needs. The government will raise the maximum loan quantum from $5 million to 10 million Singapore dollars and enhance the government's risk share to 90% from the current 50 to 70% ongoing for the loans initiated from April 2020 to 31st March 2021 under the Trade Loan Enterprise Financing Scheme. So this way the government gets involved in taking the government's risk percentage to a much higher level of 90%, which allows financial institutions to go ahead and give these loans to deserving companies in the form of working capital loan and trade loans to tide across this pandemic period. The next plan is on the loan insurance scheme, which helps SMEs secure short-term trade loans by having commercial insurance co-share the loan default with participating financial institution. A portion of the insurance premium paid by the SMEs to insurance for the loan insurance scheme will be supported by the government. The government will increase support for the loan insurance scheme insurance premium from 50% to 80% for 1 year. So for the first year, which is between 1st April to 31st March 2020, the premium which a company will have to pay to obtain a loan, which is going to be insured by a commercial institution or a financial institution, the premium in the first year will be borne by the government to the tune of 80%. Temporary Bridging Loan Program for all sectors. Administered by Enterprise Singapore, the Temporary Bridging Loan Program was launched in March 2020 to provide additional cash flow support for tourism sector enterprises for 1 year, that is till 31st March 2021. The temporary bridging loan program will be expanded to all sectors from 1st April 2020. The maximum loan quantum will also be increased to 5 million with the interest rate capped at 5% per annum. The government will provide 90% risk share for loans initiated from 8th April 2020 to 31st March 2021 under this particular program. There are also various sector-specific support. The first one we speak about is to enhancement to adapt and grow initiative. The enhanced support under the adapt and grow initiative for more directly impacted sectors such as hotels, retail, food services, tourism, and air transport will initially be extending the fund support during for few existing redeployment programs will be from current 3 months to a maximum of 6 months period. Property tax rebates for non-residential properties. So non-residential properties will be granted a rebate for property tax payable from the period 1st Jan 2020 to 31st of December 2020. The property owners is required to pass on to his tenant the full amount of property tax rebate attributable to the rented property in a timely manner and unconditionally. The property tax rebate is to be passed on by making a cash payment to the property owner's tenant or by reducing or offsetting the same in future rental payments. The property tax rebates will be at three levels at 100%, 60%, and 30% for different premises respectively. Coming to the land transport sector, eligible taxi hirers and PHC drivers will continue to receive the special relief fund payments of $300 per vehicle per month until end of September. The Land Transport Authority (LTA) will grant further waivers to operators' license fees totaling to about $3 million. The Land Transport Authority will extend a tax rebate to offset some of the special tax and road tax applicable for each ideal taxi. LTA will also waive the $100 PHC vehicle outward conversion fees from May to September 2020. Continuing looking at some of the relief measures for maritime sector, 50% of port dues concession to cruise ships and regional ferries with a port stay of not more than 5 days and passenger carrying harbor craft from 1st March 2020 to December 31st 2020 where they get a concession of 50% on the port due fees. In addition to the 15% rebate to regional ferry operators to offset their rental fees for overnight berthing of vessels and counter rental at Taramera ferry terminal for 3 months from March 2020, and an additional 35% rebate will be provided. 100% waiver of public license fees of passenger terminal operators for 1 year. Coming to rental waivers for tenants in government owned or managed non-residential facilities. So stall holders of hawker centers and markets who qualified for the 1 month's worth of rental waiver announced in Budget 2020 will now get 3 months worth of rental waiver, that is 2 extra months with a minimum waiver of $200 per month. Commercial tenants who qualified for the half a month's worth of rental waiver announced in Budget 2020 will now get 2 months worth of rental waiver in total, that is extra 1.5 months. Eligible tenants or lessee may include those providing commercial accommodation, retail, F&B, recreation, entertainment, and healthcare services. 1 month's worth of rental waiver to eligible tenants of other non-residential premises who do not pay property taxes. And eligible lessees and tenants may include those in premises used for industrial or agricultural purpose or as an office, a business or science park, or a petrol station. So they all get the rental waivers from this government owned or managed non-residential facilities in the following format. Now coming to the aviation sector, the sector which was the most hardly hit in any part of the country, which has led to many bankruptcies and liquidation of various airlines. So all airlines that has operated scheduled passenger flights between mainland China and Singapore before the COVID outbreak will receive landing credits. Those that operate scheduled passenger flights between mainland China and Singapore during up to 31st of July will receive 100% landing charges rebate for these flights. 100% parking charge rebate for all scheduled passenger flights up to 31st October 2020. 10% landing charge rebate for all scheduled passenger flights landing in Singapore between 1st April 2020 and 31st October 2020. 50% rebates on CAA's regulatory fees for new and renewed certificate of airworthiness paid by Singapore carriers flying scheduled flights in financial year 2019. 12-month waiver of the planned 1% annual increase in landing, parking, and aerobridged charges for all flights, which had been previously announced on 28 February 2018 and is scheduled to take effect from 1st April 2020. So there's another 12 months waiver on that. 50% rebate on rental paid for airlines lounges and offices within the Changi International Airport Terminal between April 1, 2020 to 31st of October 2020, both days inclusive. So that's a big relief for various airlines operating out of Singapore. Coming to the cargo sector, which is also part of the airlines, 10% landing charge rebate for all scheduled freighter flights up to 31st of October 2020, 20% rental rebate for cargo agents tenanted in the Changi Air Freight Center between 1st April to 31st October 2020, and a 12-month waiver of the planned 1% annual increase in the LPA charges scheduled to take effect from 1st April 2020. For other airport stakeholders, ground handling agents, retail F&B tenants at the airport will also receive a rental rebate. So these are the various points which are covered under this scheme. Look forward to meeting you in yet another interesting presentation, which will cover the part two of the plans, which will include the Mass Monetary Authority of Singapore and the support services packages, which is given by the Singapore government to Singaporeans and permanent residents. Thank you. Looking forward to see you in yet another presentation. Have a good day. Stay safe.